Today I'm sitting down with Kunal Desai from Bulls on Wall Street, and this is not a surface-level trading interview. Kunal and I go back more than a decade to the early days when Intel i7s were just coming out and easy trading computers was barely getting off the ground. So this is a real conversation between two guys who've seen full market cycles and paid tuition along the way. In this episode, we get into how Kunal actually trades, how he finds hot sectors before they explode, why he focuses on high beta momentum stocks, and how he manages risk so one bad day doesn't wipe him out. We also talk about why most traders fail, how shiny object syndrome destroys accounts, and what finally separates gamblers from professionals. If you're serious about trading, this is one you don't want to miss. I am here with Kunal Desai from Bulls on Wall Street. Thanks so much for joining me. You guys may not be aware, but Kunal and I know each other, I think at least 10 years, right, brother?
Way more than that. I mean, I was
longer than that.
You sold me my first trading computer in 2000. So in 2010. That was when the Intel i7s just came out, and you were like, "You got to get one of these." And
awesome, man. That was when I first started easy trading computers. That was the first year. So I appreciate that we're still talking. You must have been one of my first customers.
I believe so.
So thank you for that. So you had Bulls on Wall Street. I think you had that up and running even back then.
Yeah, I did. I've had that business since
awesome,
2008, and then really around right when I was speaking with you, that's when it really started taking off.
So I'm really curious about your trading strategies and what you're teaching on Bulls on Wall Street, and kind of like what your technique is, how it's been refined over the years. But before we get into that, I want to hear like your origin story. How did you get into trading? What was the spark? What was the thing that made you go, I am going to be a trader?
No, I think some of this was like for so many people, right place, right time. You know, I was in high school in the late 90s, right during that kind of like .com boom. And right during that time, like you had all the internet stuff happening. Like, you know, at your high school, you had computer labs now, right? And you could just go in there and mess around. And so I was just interested in trading because my dad was like one of those typical, like, you know, in every boom, you get those dads that are just throwing some money at like whatever stock they see on CNBC or something, right? And they make money, they take you out to dinner, and it's like this big deal. Like, oh, you know, I hit a big one on Yahoo. Dinner's on me tonight, guys. And my dad was, you know, one of these people. And so I was really always interested in it because it was like, my dad would randomly, like every 3 months, be like, all right, guys, we're going to Pizza Hut today, you know?
What's Pizza Hut?
Does
it even exist anymore?
I hope so. I don't
I don't think those restaurants exist anymore.
I mean, those are the
best. Went to pure delivery.
Chili's, Applebee's. I mean, that's like a 90s thing. I was interested in it. And then I went to school. I graduated in 99, so I went to school that year at Michigan State University. And college is like one of those things like where you have an immense amount of free time compared to what you do in high school where, you know, your parents are on your butt all the time. You're playing sports. Like your day is really regimented. Like you got to get to school. If you're not doing school stuff, you're doing sports stuff or, you know, work stuff to get ready for college. Like your whole day is full. In college, it's like you have like 2 classes a day. And you have all this spare time. And so I thought that was like just that perfect storm of like right place, right time. It's like I'm in school, I got all this free time, and you have access to computers everywhere, you know, which for the first time in my life, it's like in my dorm room, there was 2 computer labs, you know, they make you bring a laptop to school. Like you had that Ethernet and Napster was popping and right, like all of this kind of stuff. You just have this like cool stuff going on. So I was really into it because I had all this free time now. And so I really buckled down. And so then I was really dabbling on and off for like years. Like, you know, I still have no education in this. So I'm just like spending hours at it every single day in the computer lab, just like reading whatever I can, going on forums, message boards. And, you know, back then they didn't have PDT and stuff either. So, right, you could, you know, throw a couple grand into an account and like you could just wheel and deal like all you want. And so I did that. And then, you know, I still was not good enough to go full-time when I was post-college. Like I was boom or bust like anybody else. But then a couple years after college, I met my mentor, Paul, And he really kind of helped take everything that I'd been doing and refine it down into really like systems and processes. Now with so much information out there, like, of course, everybody has systems and processes and journals for everything because it's all at your fingertips. Back then, like, it was like we didn't even think like that in terms of trading, at least not like when you're just getting started. Now it's like, you're day one and you're like, oh my, you have a trade journal before you even take a trade, right? And you have like, you have like logs of data and you have never taken a trade. You're like, oh, like, what kind of data is this? My simulator data, right? And you don't have all of that. My mentor really helped refine all that nonsense I'd been doing for 5, 6 years and find out like really kind of where I was good and where I was not and what I needed to work on, and then kind of put pen to paper. And that's when I really started taking off around 2006.
Wow. So it took you quite some years to kind of work it all through. I know, for example, I teach trading, and I've learned and I see that a lot of new traders, they're all excited about the
Sure.
opportunity. And so there's no thinking about systems and processes. It's like, I want to jump in, and it's like a gambling mentality
Sure.
when you first get started, and that's understandable. And if you don't blow up the account, or you do get hit over the head without blowing up the entire account, that's when you might start putting some systems and processes into place, or you give up.
It's easier.
That's what I've kind of
It's
noticed.
easier to find the Lord when you're in jail, right? Or when you've had cancer. Like it's always
That's a great way. I'm just going to steal that
like
line.
it's always the way, right? So you got to kind of go through that a little bit. Not everybody does, but frankly, you're gonna have to learn a couple lessons here or there anyway.
So did you get bonked over the head a few times in the
Yeah, I
beginning?
did, but I was so young, like in hindsight, it felt like these terrible losses, but they really weren't because it's like, you're at 19, 20, 22, like I lost 5 grand. Yeah, at the time, like it could sound like the end of the world.
Yeah, it might have been like all your money back then.
Yeah, and I'd grown it till 20, 30,000 a couple times and you lose it. But like
Mm.
in the scheme of things, it's not like really an epic thing. These days you run into people and they're like, I lost $1 million trading call options on something, and you're like, what?
Why would you do that? That's
Huh?
ridiculous. Well, there's people out there who bet the ranch,
Yeah.
literally. They will bet their entire net worth. And that's a scary thing. That's systems and processes and learning how to manage risk. That fixes all of that
But
if you can look at it
do you
that way.
think being in the computer business, like, making computers and really, doing what you do, like helped you with your trading? Because obviously, like,
Oh,
failure.
absolutely, absolutely. Because in my opinion, at least my system for trading, I only focus on 4 chart
Okay.
patterns. And a lot of the time I spend trading is sitting and waiting for my patterns to set up
Sure.
perfectly and my buy points to show up perfectly. And with my system, I don't trade in the first 15 minutes when the market
Okay.
opens, because that's when I trade breakouts, and there's a lot of false
Yeah.
breakouts in those first 15 minutes. So I have to wait for that first 15 minutes to go by, really look at the volume. Is it running
Sure.
ahead of its average volume? Is there really institutional accumulate? Like, there's rules. Um, and so because I spend so much time waiting, I would have a tendency to
Okay.
overtrade back in the day before I started the computer
Sure.
business, because I started working at 12 years old delivering newspapers. I always liked having money in my
Yeah.
pocket. And I had this thing in the back of my head from my dad, hard work pays off. You got to have your mind engaged if you want to have money in your pocket.
Sure.
But when it comes to trading, that's not really true. You can't always be in a position just to keep your mind busy. And so, from my point of view, the computer business was a perfect balance because it gave me something that I could work on in every day, do something constructive, where I was actually being productive, working on something that was building something. Trading isn't really, you're not really building anything
Oh.
in like building a business. So for me, it was quite a balance. What's your feeling?
Yeah, I think having like other things in that can that you're building help lead into trading, because so much of it is like having structure and having processes for everything, where, if you haven't learned that from something else, it's really tough to put it in practice. Even though you read about it, like I teach, classes and stuff, you can read about it, but it doesn't mean anything. Like I've noticed like some of my best students are like pilots or like even military guys. Like they end up being like
You're the second guy, you're the second podcast I've done where they said pilots and
yeah,
military.
like
Pilots work off of checklists.
they're just so good. Like they like very, very system oriented, and their checklist is so big, right? So like I've noticed like a couple of the students I have, and they're better for swing trading, especially because you have to wait more. Day trading, there's still an intuitive feel to some of it, where, with swing trading, you can really be analytical. But having a pilot could have like 100 thing checklist, right? I mean, so those guys, they just crush at swing trading because they have no problem. Like I have a pilot student of mine. He'll wait weeks before he gets into like the perfect trade, and then he's gangbusters because he was also ex-military. So he's got balls of steel too. So it's like,
Oh, wow. Okay.
he can go in full size, minimize his risk, like full checklist, and he'll wait. And it's like it's an incredible thing. So I think having like some specific areas where you learn this stuff beforehand, it does come into play.
Yeah, for sure, for sure. So, you met this guy, Paul.
Yeah.
And is Paul still part of your trading journey today,
Yeah,
or yeah? That's
Paul
awesome.
works for me. He does our swing trading service. When in 2006,
Oh,
when he tutored
fantastic.
me, he taught me swing trading first, and he's still doing that to this day. And yeah, he works with me now at Bulls on Wall Street.
So tell me about your day trading. I want to know about your day trading strategy. Please let us know your day trading strategy. Of course, you don't need to give all the nitty-gritty detail, but just like an overview picture.
Yeah, so I'm primarily a momentum trader, or what we call trend trader. I focus in on anything that's like high beta stocks with tons of liquidity. Those could be your, big blue chip type of stocks, but really I'm more of a thematic trader. What I mean by thematic
Mm,
trader is like I'm always hunting around for catalysts, because that's also where the volume is and the flow is. I have no interest in trading, Bank of America or Ford Motor Company or something that moves like, like a 1%,
crawls.
1% ATR a day. I'm always hunting for sector themes and catalysts, because that's where the big moves are. Like things like, currently like these space stocks are going because there's a rumor of a SpaceX IPO coming out, right? And so the offshoot of that is that every single company with the word space in it is going, right? And so you have your ASTS or RKLB, and these type of catalysts, they expand the ATRs of stocks into a way where you can get outsized returns because you're trading the best names with catalysts that have also tons of volume coming in. Beyond
So how do you find these? You're looking at heat
So I
maps?
use TC 2000, which is just a software. It's like $50 a month. It's just a charting software. It's really not any different than Trading View or Trend Spider, but they have a much
Right.
better way of making scans and being able to visually see like what sectors are going. And so I run two different types of scans always. I keep a big sector list, right? So a list of basically every single index around, and I'm going through that on a deep dive every Sunday. And then in the mornings, I'm also pairing that with news just to see like which sectors are moving in the pre-market. And then I'll filter through, okay, this one has news out, this has news, okay, autonomous driving news, whatever it might be. And I'll start matching these things together, and then I'll look at the charts. And then from there, I'll go in really granular detail into all the stocks that are inside that sector. Now, nowadays,
Okay.
for the most part, like with all this like kind of new themes that are out there, whether it's like nuclear or space, there's not really that many stocks. You could have 5 or 10. So the amount of like research you're really doing is not like what you would think. It's not like a biotech company where you're like, I need to find a biotech. Okay, well, there's, 1,000 biotech companies, right?
It's a lot of biotech companies.
Now it's like, okay, somebody's like, oh, find me a space stock. There's only a handful of them out there. So it's much easier to sift through, at least in the new themes that have been emerging in the last 2 years that are all AI, future techie related, whether it's AI
Right.
or space or drones, right? Like today, one of the themes that we've been trading is drone stocks. And so we're in RCAT and UMAC and DPRO and all this because there was a PR out last week that said, the US government was looking into DJI, which is the world's biggest drone maker. And so, right, there's an offshoot of this kind of stuff and the money floats in.
Thought that was a Chinese
Yeah.
company, but interesting. I didn't hear that news. That's why I'm like, oh,
Yeah.
that's
Yeah.
interesting.
And so they're all flying right now.
So do you do you I love first of all, I love the technology. I'm a tech
Me too.
geek. But more importantly, when it comes to trading, you teach inside of Bulls on Wall Street, teach people exactly how to find these hot sectors because there's a lot of times these sectors are kind of like, the average person doesn't even know about space stocks, or the average person probably hasn't heard that they're talking about building data centers in space or how it's even possible. Not, it may not be possible, but it doesn't matter if there's demand for these stocks and you can get some monster runs in some of these stocks. So I have a two-part question. Number one is, do you teach people how to find these inside of Bulls on Wall Street?
Yeah. So I run a 60-day course. There's nothing left. It's like I'm a one shot, one kill teacher. Like I got one Big Daddy course. It's 60 days long and every single thing that you need to know from top to bottom goes in it. So we start everybody off with
Okay.
just the basic fundamentals of how the market works. And every day we're overlaying more and more complicated, subjects till we build up into the grand finale of putting it all together.
Okay. And then the other question related is, you mentioned before you look for stocks that have high beta.
Mhm.
Now, beta might be something a lot of people don't understand. So can you explain what beta means?
In general, like the easiest way to put it is I'm looking for stocks with big range outside what a normal stock would do, right? So like if you're looking at, the average stock, if it moves 1% per day, I'm looking at trying to find stocks that move 3% per day or 4% per day. I'm looking for outlier moves. That way my money is used in an efficient manner. If you only have $100,000 and you're trading stocks that move 1%, versus you have $100,000 and you're moving it around and you're trading stocks to move 5 or 10%. Well, the opportunity to make money is a lot more in the 5 to 10%.
Right, exactly. I'm a big fan of high beta stocks. They're certainly a lot more fun, and they also can be a lot more risky.
They can.
So, what's your technique for managing risk?
So I go couple different ways on this. Well, number one, even I'm not one of these people that believe the market makers are always trying to get you. I use stop losses. It's the easiest way. I got a newborn in the house. I'm chasing him around quite a bit. Like I'm not leaving my positions unprotected. The second part is always position sizing. I size my positions based on two functions. Number one is risk, but the second one is probabilities in terms of, right, how good the trade is, right? And I have data for everything on how I trade XYZ patterns, how I trade morning to afternoon, how I trade in the first hour compared to the last hour. So I have a direct knowledge of, right, how much probability I have on a specific type of pattern and the specific time of day. And then I'm using my risk to see, okay, I've got a 1% risk on this, 1% stop loss on this one. I can be in this many shares. If I have a 0.5% stop loss, I can be in twice as many shares, and then I'm mixing in the probabilities with that. And so that's how I size my position. So I'm never going and risking more than, say, 5% of my portfolio in a day. If I have three to five positions, I'm at maybe 5% max risk. If I saw that it was just a unique gang banger opportunity, I would up my risk profile, but I would tell myself, like, okay, if I up my risk profile on this trade, I'm only willing to risk really like what my weekly drawdown would be, right? That means if I don't get it, right, Like if this doesn't work, then I'm out for the week. Like, I have no more risk to take. And so I try not to go there, right? Because it's like, if it doesn't work, you're just sitting around all week. But you have to have those kind of
Right.
systems in place. Otherwise, you're the guy who makes $1 million one year and lost it the next year and owes taxes on it
Yeah.
and owes
Yeah.
taxes on the first one.
Yeah. I mean, even getting to be a break-even trader is a bit of an accomplishment for newer traders.
It is, and it doesn't have to be, right? Like it's, sometimes we make everything so complicated. People are like information whores these days because between Twitter and books and this and that and all the seminars and YouTube,
Of
they
course.
they cross mix strategies endlessly. It's good to learn strategies within a certain system. So for example, if I'm trading trends and momentum and I'm learning different strategies that fit inside the momentum, module of things that I can do, that's a good thing. And maybe I can expand on my toolbox a little bit. But if I'm a momentum trader and I'm spending my whole time learning about deep Fibonacci retracements or mean reversion trades or right these type of things, liquidity swipes, and I don't even know what that means, but people talk about it all the time, right? Like if I'm learning about these kind of things, those are the opposite of trending techniques. And so now you're kind of mixing something that makes no sense with what you're trying to do. So you're not going to be necessarily profitable. The best thing to do to kind of get over the hump is like really zone in on like a particular type of strategy, or methodology. And sure, you learn a few things under it, but like you got to kind of hone down into it. Otherwise, you're just kind of mixing in crap with crap.
Absolutely. Totally agree. And the number of variables that are out there are infinite, and we're bombarded with more and more information and noise. I wouldn't even call it information, a lot
Yeah,
of it.
yeah.
Noise. Like I always say, if you have CNBC playing in the background, you're going to make bad
Yeah.
trades because subconsciously that message is getting in there. Um, Question for you. So how do you enter a trade? It sounds like you're not a pullback trader or a mean reversion trader. So are you a breakout
Yeah.
trader?
So
What's your entry
I
point?
will take breakouts, and I'll take pullbacks too, like within the context of a bigger picture idea. So like if I have like say a breakout chart on the daily chart, right? I may enter on a pullback on a 5 minute chart or a breakout on a 5 minute chart. So what I'll have is I always get my ideas on a big picture basis. I have a thesis behind a trade. And then what I'm doing is using a 5 minute chart to really pinpoint my entries and exits. And that could be using the different types of intraday patterns. So there's 3 stages to the trading day. You have your morning, your middle, and your close. So in the morning, I have 3 specific patterns that I would be willing to do to enter this big picture idea. If it was midday, which is like a little bit of the slower part of the day, I'm looking at kind of like more retracement or pullback patterns to enter in. And then the close, I would have, a whole different toolbox of ways I would get into a trade. I very rarely trade past noon anymore because I'm an old dad. I'm an old first time dad, so I'm busy chasing babies.
Do you hold stocks overnight
I
or are you
do.
specifically day
I
trading?
do. So I would say, 99% of my trades are day trades because I could take 20, 30 trades in a day as a day trader. And
Wow.
I'll
Wow.
keep a portfolio also of swing trading stocks depending on the market conditions. Day trading is only scalable, I think, up until a certain level. At some point, you
Right.
don't want to let that money just keep accumulating in your day trading account and it turns into like some weird video game. You have liquidity issues, but you also have psychological things. It turns into a video game. I, I'm a firm believer. Like day trading is for income, building businesses, and swing trading and investing is kind of like for wealth generation. And so, like, I use day
Mm.
trading, pay my bills, and buy my toys, and do whatever I want. And then, I want to take that money and get it out of that day trading stress and that volatility and put it in other stuff. And that's a way to just kind of smooth out your stress a little bit too. But it's hard. Like, I've talked to people and I've never tried it, but I've seen people try day trade with 10, 15 million bucks, people that have made big bucks in their life. And
Oh, and they're using all of that to day
Yeah, and
trade?
it's like, we just
So,
run into
yeah,
so
that's
many issues.
I mean, if you're worth $100 million,
Sure.
maybe relative, but if it's like your total net worth and
Yeah.
you're,
Well, it's
that's
just they built the money from day trading, right? So it's what they know.
right.
But at some point, you have to learn other stuff. I did the same thing in 2012 in a smaller scale, which is, when I started Bulls on Wall Street, I only traded small caps. But at some point, even if you have, like, say, a couple 100,000 in your account, you don't trade small caps as effectively. Like, what are you going to buy 50,000, 60,000 shares of this $2 stock with a 2-cent spread, and you have liquidity issues, weird fills.
It is psychologically, it's hard to scale up and keep everything like relative to when you first started because you just keep playing bigger and
Yeah,
bigger.
yeah.
And it's that percent game can kind of mess with your head as the number gets
It
bigger.
is. And, like, small caps can drop on a dot.
Probably a
They
limitation.
drop on a dot and you get always terrible fills, like you never get fill where you want. And so at that point, I had to do something similar, which is like, you know what? I'm just going to trade more mid cap names and larger cap names. And at some point in 2016, 2017, I'm like, man, even some of these mid cap names, I'm not getting the same amount of liquidity I need. A lot of them have 10, 15-cent spreads. If I only want to trade the morning, I can't have big spreads, as I want to get in and out. Okay, maybe I got to trade a little bit larger names now, and so you kind of move around things a little bit,
Right.
try to scale your style of trading accordingly because you can't do the same thing forever.
Right, right. So tell me, I would imagine you get a lot of people who are new to trading
Yeah.
into
Yeah.
Bulls on Wall
Almost
Street.
everybody.
What do you see? What do you think are the biggest mistakes newer traders or even existing traders? What would you say are like the top 3 mistakes you see traders make?
I think the first one is just unrealistic expectations. I can't count how many, I teach all my courses live. So I actually have interaction with all my students. So whenever we have course, like, I talk with them on the phone, I talk with them during class. One of the things that you'll see, even with people with smaller accounts and stuff like that, I talked to one of my boys, Robert, and he's like, yeah, and he's like, man, it's like, I'm in this weird slump. He's like, I keep giving my profits. I'm like, oh, maybe he's up a couple $100. He's going ready. I'm like, how much money you been up every day? And he's like, well, every day I've been up $1,000. I'm like, $1,000? You're brand new. How many days in a row? He's like, it's that 13, 14 days. I've been up $1,000. But, then I push on and I give it back. I'm like, you have zero experience, almost zero capital, right? Like, you're barely above the PDT. Like, you're on that edge, right? Like, this is a no.
Well, that's an accident waiting to happen.
Well, yeah.
Sounds like to me.
So it's like, but it's just unrealistic. So then you look at his trades and the trades are very good. I was like, oh, actually, these are good trades. But then he kept pushing it through. It's like, well, I really want to try to get the $2,000 a day. You want to make 10% a day? Me too, right? Like, but let's calm the horses down a bit.
Well, in my opinion, I tell this story a lot. I'll just tell it very quickly. When you first start trading, if you get a couple winners in a row, it's probably the worst thing that can happen because you get cocky, you get arrogant, you think it's easy. When I started as a stockbroker in the early 90s, you guys know me as the trading computer guy. I was a complete computer nerd. So when I started as a stockbroker, and back then we were dialing for dollars, just like you see in the movies, but I was recommending Microsoft and Intel and AOL, this new company called AOL. And guess what? All these stocks worked. And for like 7, 8 years in a row, almost like 70% of the stocks I recommended to new customers worked. So talk about having a lot of success and be over and over again and just going from 0 to 500 clients over an 8-year period, like how it mushroomed. For me, it felt like I was a genius. By the time I was 30, I was like, oh, look at me. I'm all that. I was so cocky and so arrogant. And when the crash happened, starting in 2000 all the way 2003, I really got my bell rung.
Imagine that one lasted a while too.
So that's when I figured out how to really trade because I almost left the business completely. My ego was destroyed. And it needed to be because I was cocky. I wasn't really a nice person. I was
Sure,
arrogant.
sure.
And I really had to look at myself in the mirror and say, do I want to keep doing this? Because my tail was in between my legs. I had all these customers who were hammered. So, yeah, I think that's kind of a curse is having too many winners right in a row.
Yeah, it can happen. Everybody handles success in a different way.
Yeah. Tell me about other mistakes you see traders make.
The one that I do think that people make often is they don't give themselves enough time to really generate any type of expertise before they kind of move on to the new hot shiny thing. So in trading, you have, maybe 1,000, whatever it is, 1,000 different ways to make money. Well, like you may learn something. I see this with my students all the time, a subset of them. You could spend 60 days learning this course. There's no holes in it, right? So it's like, it's a full encompassing trend trading strategy. But like as you're doing this, you start coming into chat rooms and stuff, and you see other people. Hey, what are you doing over here? Oh, I got this MACD indicator, Fibonacci retracement script from Think or Swim going. It's like, oh wow, can I get that? Right? It's like, and then it's like, no, what's this thing? Oh, I got this from a guy on TradingView. Look at this. It's a special indicator that does this, and you start diving into all of this stuff. And you never really got good at the first thing. So your foundation is super weak, and you just build a foundation. It doesn't matter on what, but right, stock market fundamentals, how the market works, support, resistance, trends, you have the basics of, trading in general, and make sure that that foundation is immaculate before you start adding other things to it. So a lot of times people don't give themselves, you have this like kind of cognitive overload that happens in trading where you have so many variables hit at you at once. And the only way to kind of get past that overload in the beginning is by just repetitions of doing your system the
Repetition.
exact same way 1,000 times, whatever it might be, right?
It's called practice.
And they just
Or like weightlifting, you just have to keep the consistency, practice, 10,000 hours.
It is, but and so people just get this like itchy trigger finger. There's always something shiny around. Like, look at this guy. He's boring. He's got a shitty car, right? Or whatever it might be. Look at this guy. He's got a Lambo and he's only 22 and he's got gold teeth. And it's like, all right, like whatever it might be. Like, it's like there's always something weird, shiny around there. And it just pulls at them because there's so much access to information. Before I thought it was maybe, even though now there's more information, it should be easier for people to trade. The failure rates are higher now than they were probably 10, 15 years ago.
Really?
I believe so. Like I'm noticing even in my own classes, I could have 50 people in it, but people have more money now than they used to. Also, people spend money on stupid stuff. And so it's like,
do they have the money or they have
whatever
cards?
It might be, but you don't, like people now might spend $4,000 on a class. They might show up a little. I'll have maybe 20% of the students. They might show up part of the time that, they do this out of the
80-20 rule.
Yeah. Out of the 50 students, like how many of them do all their homework, all their quizzes, all their group work?
Less than 20%.
We have business plans that we do. I would say 5 to 10 people do the whole shebang. Then go in the simulator, log the simulator trades. I would say when I first started my boot camps, because maybe nobody had been doing these kind of live courses before with that type of structure, I would say almost everybody did them. Business plan, simulator, group work, homework, quizzes, like all of that, and the classes were of course smaller, but everybody did it all. And maybe it's because there wasn't that much information out there. We all had to, if you wanted other information, you had to read a 500-page, very boring book, right? Like trading books are boring and they're very long. And if you wanted other information, like you really got to read some trading book from 1982, right? Like, and you can spend 60 hours reading it, or you just do what I tell you to do, right? And then,
well, that's a goal. That's your goal in teaching is to don't make the mistakes I make. If you do it this way, you have a chance of being successful. I think there's a strong argument that human beings' attention span, just because of things like social media, doom scrolling, the dopamine hit that people get from scrolling through shorts or Instagram makes attention span so much lower than it used to be.
It really does. I mean, I catch myself in it too. Like, I use
Yeah,
I
I
use
know.
social media for my business, and I'm like, I'll go in with the plan. Like, hey, I just got to post my Black Friday sale, a couple of this, a couple charts, and next thing you know, it's like London is being invaded by migrants, and you're like, how did this come about?
Yeah, they feed you. It's a distraction. It's a.
And I'm like, really?
I mean, I can really rant on the
Yeah,
topic,
yeah.
but I think that's what it is. And then there's a group of people, they bought the course, they bought your boot camp, and then they think they solved the problem because they spent the money.
And it's just like that doesn't even get your foot in the door. It just opened a crack of the door.
It's like go into your closet and look how many pieces of clothing are hanging there that you probably never
Yeah,
wear.
yeah. And some people are just class buyers. And I myself, I
Yeah.
can feel that because, like, as a business owner, I've also bought lots of classes on like building businesses, tons of them. And it was like kind of like in the hindsight, I was like, man, what was the basic tenets that I really needed? Show up on time, give great customer service, do the little things every day, treat your employees really well, make sure there's not as much turnover, right? And like that was really the gist of it. But I did the Tony Robbins ones. I did, well, I mean, every single one, the John Maxwell program.
Tony's pretty good,
Yeah,
though.
they are. The
Tony's
John
pretty good.
Maxwell programs. Like I also homie hopped, in programs
Yeah.
too.
Oh, homie hopped. I love that. I never heard that before. That's great. Yeah, I have too. With both, like motivational
Me
guys
too.
and even trading. Just trying to hear more things. The more trading programs I've taken, the more I've stuck to my own methodology, but learned how to really refine it, like you talk about, having processes, having rules based, and it's hard because as a trader, human beings aren't robots, and that's where I think, like you were mentioning, the shiny object syndrome really kicks in because you have to be robotic with a set of rules to make it work, and that's boring for most people.
It is. Blocking out distractions is just a hard thing to do. I tell people,
Harder than
I
ever.
tell people all the
Harder
time,
than
it's
ever.
like when I call one of my students or ask them, like, where's this work or where is this thing? Or like, you're not even doing the basic scans. Like if you don't have time to go through 50 stocks a day and look at charts, like, how are
Right.
you going to do any of this? Well, I've got kids. Okay, well, so does everybody else. Well, I got a job. So does everybody else. My mother's
They don't want it bad
my
enough.
mother's this. Okay, so it's the same thing. Hey, look, in your life, you're always going to have a sick relative. Your children are always going to be asking you for stuff, and your boss is always going to be on your ass. And the time never slows down. Like it never slows down. And when those things, maybe they change, something else happens. Like it's never like there's never a good time for it to be a good time. So spend 30 minutes, 40 minutes, whatever you can. Go in your bathroom, whatever, lock your doors, and you tell everybody, like, this is my time. All right, this is my time. I can't hear from anybody because that's the only way you're really going to get it done. Otherwise, life never slows down. I got a to-do list of hundreds of things that's like years old, right? Like, I'm like, one day I could really
Yes,
do
I have the same
like it never happened.
exact same thing. I know, and it's like so many of them are priority, and but we're entrepreneurs. We have different
Yeah.
kind of
It-
minds, but what you're describing is like people think they want to learn how to trade, but then they realize what's involved is more than they expected. They thought it was going to be really easy, or it wasn't going to take as much time. It's like learning anything again. So tell everybody, where is the best place to find you?
Hey, come on my website, bullsonwallstreet.com, or you can always see me on Twitter, KUNAL00, or Instagram, Kunal00. You'll see us on YouTube too, Bulls on Wall Street.
Awesome. And you mentioned the boot camp. Is that the place people would start?
Yeah, most of my people, I have chat rooms and stuff like that for day trading, swing trading. But usually most of the members in my chat room are boot camp students. It's nice to have like a cohesive group of people versus people just piling into a chat room talking nonsense.
Right. Are you moderating it or screen sharing in the
Yeah,
room?
so
Or
I
is it
trade,
pure?
I get
Yeah.
on Zoom every day. I got my charts up, my trading platform, all that stuff, and I'm wheeling and dealing.
You're telling people exactly what you're doing and
Yeah,
why.
you gotta.
That is
Yeah,
cool,
you
man.
got to do it in real time because it's like how I like to do it is if they're taking class at night, their class from 8 to 10 at night, then okay, then they go to sleep and then I get on in the morning, we do a pre-market show, get everybody ready, then I trade live till maybe about noon. I'll trade the whole day if it
Wow.
was active, but it's very rarely like that, you know. So usually till
Yeah.
noon and then so they get to watch me, you know, and we're kind of marrying the concepts we learned from class into real life and they can see like, oh man, he screwed up this trade. And so then after I'm done trading, we review all the trades. Here, this is what we traded today. This is what went right. This is what went wrong. Hey, I chased this. Look, on this particular pattern, I'm supposed to wait minimum 3 candles. So first 15 minutes, I'm supposed to sit out this pattern. But what did I do? I jumped the gun. It's like minute 11 and I jumped in. And so what happened? It failed.
FOMO.
Right. And
FOMO
yeah.
trade. Yep. I still make that mistake too. And I told you, I have to wait the first 15
Yeah.
minutes. It's part of my system. And I still, to this day, will once in a while get that, I'm missing it. I was hot on this stock and now I'm
Oh,
missing
yeah.
it. But there's always a better entry.
Always. They come down.
Yeah. I think what you do is great. And you're consistent. Like sounds like you're married to really doing that. That's hard. That's hard to have that live room every day. It shows how dedicated you
Yeah,
are.
I've been doing the live room since 2008.
Wow, man. You're an old soul especially in the world of the live rooms.
Yeah.
As you know, is a lot of these fly by night cats
There's a whole host
out
of
there
them.
with the lamb. Last question for you. What do you think of trader funding?
I'm into it. I'll tell you why. So I was completely against it for many years. And then oddly, you know, I had a couple students of mine that had just terrible risk management, like just terrible. And I said, you know, we could not put any safeguard. They knew how to trade, but it's like 1 or 2 trades, always got away from them. Okay, well, what can we do? So obviously we tried all the woosa stuff, read all the books, right? Like it's not working. So why don't we do this? Why don't you try trading one of these prop firms? I mean, they're going to have built-in risk systems because they just kick you out. And what's going to probably happen is like, you know, they'll kick you out 3-4 times in a row and you'll lose that money. And then the next time you're going to be like, oh man, if I lose another $100, like my account's going to be shut down, right? Because they have very, very tight risk parameters for most of them. Very tight risk parameters. But it's all just a giant simulator anyways. And so you have unlimited liquidity and you can just focus on charts. And it's not the ideal way, but it will teach you some discipline, at least on the risk management side. And I think for a good chunk of people, starting there, like that's not your end goal and it shouldn't be. Like these people are like, hey, I scaled out 50 prop accounts, I made $1 million. No. Get one and use it as a simulator. Use it as your simulator, you know, because you know what? The simulator can be a little bit boring anyways, right? You have no skin on the line. But like, you know, having a prop account's like kind of playing like fantasy football. Hey, I'm betting $100. I might win. I might not. But, you know, I'm having a good time, so on and so forth. But I do think it'll get you in the trading game and it will teach you risk management because they're built in. Like if you have a $50,000 prop account, they let you lose whatever, $2,000, right? That's your max loss, you know, and if you lose it in one trade, well, guess what? You got pop-ups all over the place, refill your account. That's not fun. You do that a few times, you're like, and then they have other ones. They'll have consistency rules. So now it's teaching you, okay, always take a little bit of profits. Don't go for the home run. You know, you'll have like these kind of random rules in there. And I think for a lot of these kids, like it'll teach them some good discipline that they're not going to get. Like, you know what happens? You throw $50,000 into a Think or Swim account and you blow it. I mean, you're scarred. It's gonna take a while to just come back from that, because even in your next account, if you start making money, you're still thinking, well, I'm still down 47 grand, right? Like, you could be up, but you're thinking about the old account. So
Yeah, how do I get it back? And which usually leads to more risk
I
taking.
think doing like these prop accounts and just having some small risk in the beginning and using it as a simulator to just get reps. And if you make money, you make money. But the thing is, you're not going to probably lose a lot of money. I think most of them are $100, right? $50, $100, $200. You're not going to lose a lot of money, and you're going to get the reps you need. And then at some point, your
Interesting.
goal is to, of course, get to the bigger one.
So, do you have a particular prop firms that you like?
I mean, I don't do many futures, so there's only a couple that do stocks. There's one called Trade
Right.
Makers, and there's another one called You Funded. They do stocks. Those are the two main ones that I've seen. There's another third one called Trade the Pool, which I've not tried, or none of my students have. But I would say the two main ones are Trade Makers and You Funded, and that my students have used, and they've been pretty good, and they have good platforms and all of this kind of stuff.
Okay. Are they US based?
Yeah. Well, I believe You Funded is Dubai based, but then, they switch around and go to Wyoming and all this kind of stuff. But
Yeah,
that's-
yeah. It's shell companies.
that's
Shell
how they do.
companies.
That's how everybody does all these things.
Last question for you today. What inspires you to still, all these years later, run that live room, spend as much time as you do in front of people? Because honestly, I know from my own experience, I've done it before. It's exhausting.
It's exhausting, but man, it's fun. It's fun.
That's
Day
awesome,
trade,
man. You still get so much
it's fun.
energy. Right.
And
Fantastic.
you got to do it.
Kunal, thank you so much for coming out today. This was absolutely great interview. Everybody, go check out Bulls on Wall Street. Check out Kunal's socials. Once again, your socials?
Kunal 00, KUNAL 00.
Awesome. Kunal, thank you so much.